Healthcare stocks are trailing this year, but could AI change that? This is Sectors Up Close, and we're talking healthcare. The boom in GLP-1 obesity drugs encouraged investors to pile into the sector in recent years, but the competition among drug makers has become fierce, and their stock prices are now reflecting that. The S&P 500 healthcare sector is down 4.8% this year, far behind the wider market. But could AI lead to the discovery of many more breakthrough drugs? Leah Bennett is Chief Investment Strategist at Concurrent Asset Management. Leah, I know you're a big believer in the ability of AI to revolutionise this sector. Why?
Yeah, that's a great question. I do think it's one of these sectors that has the most potential as it relates to the application of AI. I think there's a big opportunity to discover proteins at a much earlier stage and ones that have a much higher success rate ultimately of being approved. Also, if you look at clinical trials, there's a lot of G&A. There's a lot of operational elements that come to those trials, and you can really reduce the overhead and improve the profitability of the sector. So if you look at some reports that have come out, I think it could have as much as a 12% impact to revenues moving forward. So it's very significant.
With successful and effective drugs, though, as we've seen with the GLP-1 obesity drugs, even if the potential market is huge, drug makers find themselves in intense competition with each other. So is this rivalry going to eat into returns?
Yeah, I do think the big pharma companies are kind of at a different stage. Definitely the GLP-1 market is now estimated around 200 billion. And there's other potential applications beyond just weight loss. I mean, you're looking at sleep apnea and some other areas. I think as they continue to compete against each other, they're obviously generating a significant amount of cash flow. Their margins are deteriorating, but they're also going to be looking for other areas for growth moving forward. And I think the biotechs that have really that consume a lot of cash flow, that have really struggled with higher interest rates, are very attractive. A lot of those have newer technologies that are coming forward, and I think a potential wave of M&A activity could occur. Also, even if you look at the med tech companies like Abbott and Becton Dickinson, they generated a ton of cash flow with the COVID test kits, and those companies are also looking for acquisitions. So I think biotech is really ripe for some positive growth moving forward.
If investors should be going then for smaller, more experimental biotech firms rather than household name pharma, how can they pick and choose where the next Ozempic might come from?
Yeah, that's a great question, and always the challenge for managers. I personally think what's interesting is finding a company where there has been some validation of a candidate. So there is a candidate that has been approved by the FDA, and the pipeline has a similar technology. Those have a lot less risk and a lot more potential upside, I think, in this type of environment. We do see a lot of those type of companies outperforming today. So as there is more optimism that interest rates are going down, that at the minimum is going to improve their operating expenses from the perspective of just financing. So that's how I try to look at finding reduced risk in the sector.
What about the potential impact of tariffs? A lot of pharmaceutical production is outside the US, and the Trump administration wrote to drug makers last week to try and encourage them to get prices down, didn't it? So what about the fear of a specific tariff on this sector?
Yeah, that's definitely a headwind again especially for the large pharmaceutical companies and the large medical device companies. I do think that's pretty well reflected in valuations. So on a forward basis, the sector is trading around 16 and a half earnings, which is the low end of their range. So I think a lot of bad news has been priced in, and I do think it's kind of AI consolidation and hopefully the birth of some new technologies and more efficiency with the sector that is going to be a positive and help move prices forward in future in the next 12 to 18 months.
If the focus shifts then to new technology, new drugs, preventative healthcare, that sounds like good news for drug makers, but is it at the expense of other companies in the sector, like medical devices makers or health insurers?
Yeah, I definitely think you're going to see winners and losers. And I do worry about, I mean, obviously the big drag on the sector this year has been United Healthcare, if you're looking at the entire healthcare sector. So I think the managed care companies, the insurance companies, will continue to probably struggle in this environment, especially if on Friday, we saw the unemployment report, if we continue to see unemployment rise. So I do think there's winners and losers. And you've got to find the sweet spots, but I do think valuations is what is most attractive. I think valuations really reflect a lot of the uncertainties.
Do you think then that this broader sector will catch up with the wider market this year?
I do. I do. And in fact, you are starting to see some positive results from some of the biotech companies. You're starting to see some really start outperform, and some of them have actually performed better than the S&P 500, which is a little counterintuitive. But yeah, I do think that will continue to play out over the next year.
That was Leah Bennett of Concurrent Asset Management. Don't forget, you can watch more videos on Reuters.com.